Right, so now let's come to the budgeting seminar. So we have a few questions in the seminar. So most of them are theory questions. We will go through the theory quickly so you can research and do the answer on your own. We have two numerical questions, which is question number 6 and question number 7. We'll look at it in a bit. Okay, so for question number 1, when we started what is budgeting, we defined budgeting according to SEMA. We did say that a budget usually consists of a profit or loss. You planned the profit or loss, planned expenses, planned revenue, planned assets, planned cash flow is all for next year. In terms of objectives of a budget, there's all various objectives we mentioned about. For example, how to coordinate all the activities between the departments, how to communicate also these activities between the departments, how to motivate the staff, how to improve things, and also how to achieve the objective and the goals. And if you remember, we started saying the first stage of budgeting is the planning budget, and then the controlling. In terms of what are the functions of budgets, so when it comes to functions of budget, so the most important thing to remember here is about the 2 stages available. When we start with the planning the budget, we did say that the company set objective and set goals for the business to achieve for next year. And when it comes to next year, when you compare the actual results, now the business needs to evaluate the performance, and this is what comes to the second stage of budgeting, which is the controlling stage. Anyway, question number 4 asks you quickly, managers often have budget imposed on them, that's right, by senior management, and what could be the behavioral problems with this type of budget. Again guys, so you need to research, but in summary, if you remember, when we setting a budget, remember there are 2 ways. There is bottom up, which you involve as a management, you involve individuals to participate in the budget, and this is a way you motivate them and they are more accountable and responsible for their decisions. For this, for the second way, to top bottom, which means the senior management impose the budget to the individuals. That means that of course the effect will be less motivation to staff. Staff are not really accountable and responsible, and again that's of course as an individual feel less motivated to achieve the budget. Question number 5. Okay, question number 5, what are or why are budgets are uncertain? Of course not every single organization can predict the future. Okay, no way. This is why we have budget here in terms of the budget for next year. So now in terms of this, so why do you think there is no accuracy there? So due to many things. Okay, this is one of the things. Maybe machines, maybe the machines are broken down, unexpected breakdowns. For example, the situation happened in the virus COVID-19. For example, Brexit. There are many things. What could be tsunami, fire. There's a lot, many things could be a reason that no organization can accurately predict the future. Okay. Yeah, political, social unrest. There's a lot of things. Natural disasters, a lot of things. Question number 6. Question number 6 is about flexible budget. So the company here budget to sell 400 units of their product. They have prepared the following budget, and if you look here, we have sales 142,800 minus the variable cost including the labor cost 63,200, and we have the material cost of 25,200. So if you add the variable cost together, that makes 88,400 pound. So the contribution equal 54,500 because sales minus the total variable cost, and of course if you take away the fixed cost you should be able to reach to the profit of 16,600. So as you see this information is related to the budgeted figures, right? If you remember, related to the static budget. Yeah, so what you need to do, you need to copy paste them and put them under this column, the first one here. Yeah, budget 400 units, sales as you see minus variable cost which is labor and material, here we go, and contribution and the fixed cost and the profit for the year as you see. So you just copy paste this is the static budget. Now when it comes to the actual actual results, okay, when it comes to actual results here, so the actual results, we produced 460 units as you see here, 460 units here, that's the actual results, and we have the sales, total sales of 138,000. Yeah, can you see? We have labor 54,000, again that's labor, material 48,000. So if you add them together, that's total variable cost of 102,000, and we have of course the let's call it the fixed cost 20,000 here. So 20,000, and the profit at the end should be 16,000. Why 16,000? Again, the sales minus total variable cost, 138,000 minus 102,000 equal 36,000 is the contribution, and contribution minus the fixed cost 20,000 equals 16,000. So these are the actual results in the question, and these are the budgeted results in the question. And of course the question asks you to prepare a flexible budget. So remember that the way to prepare a flexible budget is based on the actual level of activities. So actual level of activities, which is 460 units, in order to eliminate the variances here, which is 0. So what you need to do here, you need to calculate the budget per unit, right? So now we agree that the flexible budget is 460 units, and this 460 units you need to multiply it by the variable cost per unit, including the labor. If you multiply by labor, 460 times 158 equal this, 460 times 63 equal this, 28,980. But the question I'm sure you need to ask, right, these figures, right, remember these figures, the budget per unit, are based on what? Based on the static budget. Are based on what? Based on the static budget, right? So in order to find the budget per unit, what you need to do, you need to divide the total in every single here, every single item, you divide it by the number of units. So for instance, 142,800 you divided by 400 units, that's 357. 63,200 divided by 400 units, 158. 25,200 divided by 463 and this divided by this equal this, contribution divided by this equal this, fixed cost divided by 400 equal, again, oh actually no, not fixed cost, because fixed cost, why guys? Because fixed costs do not change with activity levels. In this case, fixed costs should be fixed across all the level of activities. So we look at the variable cost and contribution and the sales. So once we found the budget per unit here, so what you need to do really to prepare a flexible budget, it's very simple way to do it, which you just need to multiply the budget per unit by the flexible budget here, which is the 460 units. If you multiply it, you should be able to find that the total sales equal 164,222. If you multiply by labor, by material, so you should be able to find it. So total variable cost here equal 101,660. So the contribution equal the sales minus the total variable cost equal contribution. And after that you need to take away the fixed cost 37,800, which is the equal this, so that goes and bring you to the 24,760 pound, which is the profit. So as you see, we calculated the flexible budget here. It's based on 460 units here, and we multiply it by the budget per unit based on the static budget here. When it comes to variances, you need to see the difference between the flexible budget and the difference between the actual results. So for instance, as you see, there is a difference here with 226 to 120. A stands for adverse. Adverse means unfavorable, means not good for the business. Why? Because the business expect that they will sell 164,220 pound, but they ended with sales 138,000 pound. So this means there is a difference of what? Of 26,220 and adverse. When it comes to labor, the business expect that the labor cost will be almost 72, 60, 80, but they ended with 54,000, which is less. So I would say this is F mean favorable. It's good for the business. Material, we expect that to spend on material at 28,980, but we spent actually more of this by 19,020 pound. Again, that's something is not good for the business, isn't it? So it's adverse, unfavorable. Okay, so in terms of contribution, so you will see it's adverse, of course. Why? Because contribution here, we expect to make contribution profit before fixed cost equals 62,560, but we ended with 36,000. Of course, this is the difference is adverse. In terms of fixed cost, actually we did good results in fixed cost. Why? Because we expect the flexible budget, we expect 37,800. This number taken from this, the budgeted number, 37,800, but the actual results we ended with 20,000 as a fixed cost. This is amazing. This is a great job. Well done. So that we have favorable of 17,800. Could be any reason why. One of them could be increase the activity levels, for example, in terms of to make the fixed cost per unit less, for example, or maybe maybe salaries less. There's many reasons behind it. So it's called economies of scale. So in this case, as you see here, it is 17,800. Yeah, and I would say that's mainly maybe level of activity increased. This means the fixed cost per unit will be less. So at the end, you will see that the total profit. You would see that our expectation for the profit will be 24,760, but we ended unfortunately making a 16,000 pound profit. That makes 8,760 adverse, which is unfavorable there. Okay, this is all to do with flexible budget. Question number 7 talks about incremental budgeting. When it comes to incremental budgeting, we need to prepare a statement and we need to add 5% increments for next year for in units, sales and variable cost, and you need to add 10% increase in fixed cost. In this case, guys, remember first of all that when it comes to incremental budgeting, we talk about what? We talk about the budget for next year based on the actual figures. So we have the actual figures for this year. So what we need to do in order to prepare a budget for next year, so very simple, just we need to add an increment. Okay. The 5% increment including the sales units, if you add 5%, 750 units multiply 1.05, you should be able to find 787.5. Sales, same. Variable cost is the same because we added 5%, isn't it? Because we added 5%, it's the same. Contribution, of course, that's sales minus total variable cost equal contribution. And in terms of fixed cost is 10%. If you look at the question here, look, assume it's 10% increase in fixed cost, not 5%. In this case, 40,000 multiply 1.010 equal 400, actually 44,000. And the profit, which the contribution minus the fixed cost equal the profit. So again, guys, as you see, this is only way how to prepare an increment budget. It's very simple. Just you need to add an increment for the next year. Yeah, flexible budget, we did cover it. How flexible budget used in responsibility accounting. Zero-based budgeting also we covered it. We say that zero-based budgeting is different from incremental budget. Zero-based budgeting, you need to justify the cost in every single year, and you start from the scratch in every single year. It's time consuming, it's expensive, training required, a lot of information, but again, it does show you really show you how really to allocate the resources efficiently. Okay. Yeah. Anyway, that's all to do with the seminar. Have a look. As I said in the written answer, I haven't focused too much, so the written is there. You can read them. You can do more research if you want. But again, the most important thing in terms of the numerical part, it's the flexible budget there. So yeah, that's all. Thank you very much. Take care. Bye bye, guys.